Spectrum Group and Millionaire Corner recently completed their fourth quarter in-depth research with investors regarding their portfolios as well as the investment intentions for 2013. We are excited today to be interviewing the president of Spectrum Group, George Walper, regarding the interesting findings in these reports. George, welcome.
Thank you. How are you?
I'm very good. How are you today?
Good, thanks.
Could you please first discuss who was interviewed for these reports?
Well, these are our research we did in the fourth quarter with investors of multiple wealth segments, one being mass affluent investors who have $100,000 to $1 million of net worth, and millionaires, $1 to $5 million, and ultra high net worth, $5 to $25 million. And we asked a number of questions about how they're investing, the products they're using, and their feelings about a number of different companies in the country in terms of the perceptions of those providers.
What were the most interesting findings in these reports?
Well, one of the things that's interesting is we are seeing a significant difference between levels of wealth relative to when folks are investing more and more of their assets in equities. And it really is a commentary on what's happened the last few years in the country, where the very wealthy, the 5 to 25 million, are putting far more of their money in equities compared to the mass affluent. But what happens as a result is you're starting to see significant difference in overall return for these investors. And lastly, another interesting finding is that all of the investors are also holding cash back because they're very concerned about the economic instability and the issues in Washington. So even though you have very wealthy investors saying, I want to put more in equities, they're also saying, I better have a lot of cash reserve.
Okay, how is this different than a year ago? And even further back, how is this different than maybe 5 years ago?
Well, 5 years ago, folks were extremely cautious. If you think about that being the sort of beginning 2007, getting into 2008, the economic crisis, the recession, etc. The difference is you are starting to see a return to better investment returns. So if folks are willing to put some other assets at risk. Another interesting factor is that because interest rates are so low, that even though there's so much money being held back in reserve, that folks still are looking for a larger return. So you start seeing a little bit more of a diversion in terms of people saying, gee, I can't have it in return from a short-term standpoint and equities, so now I'm looking at different kinds of non-traditional investments.
Okay. Are investors returning to the stock market because they are confident about the economy?
Not really. They're really returning to the market because the market's performing better, of course, but more importantly, they need incremental return, especially as folks are in retirement or close to retirement. They're no longer comfortable that they're going to have enough assets in retirement. So it's more about incremental return. They're very uncomfortable about the status of the economy. They're very concerned about the tax increases for some of these folks that went through at the first of the year. And this research was done when they were very unclear about what the taxes would be. So you've got a very, very uncomfortable investor out there. And as they're wealthier, they're taking more risk. And as they're not as wealthy, they're still very concerned about their future.
Okay.
Another interesting finding is the mass affluent investors, the 100,000 to $1 million. They need the most help from the industry. The industry tends to ignore a lot of them because they're not large enough accounts.
Right.
But they really need the most help. They're the ones that are still significantly challenged by the recession, by unemployment, and interest rates.
Okay. Thank you, George, so much
You're welcome,
for talking with us today. For more information about this, please go to spectrum.com. I'm Heather Kiley. Thanks for watching.